Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex quick look at heading into the new trading week for the dollar versus Swiss. So let's get started. I'm going to start by looking at the daily chart, and what we notice at the highs this week on the daily chart was right here. The market moved above the 100-day moving average. That's the blue line in the chart, and you can see that going back in time, we tried to do it right here as well, and then failed, and the market rotated to the downside in trading this week. We went up to that level, broke above it, and fell off that level as well for the second time. So there's some reluctance above the 100-day moving average, keeping the sellers more in control. Now also at the 100-day moving average was a 50% retracement. That's of this last leg to the downside from the 2023 high to the 2023 low price. So it's a key level, another key barometer. So we had dueling technical levels at the same area, same level, and the market tried to move above it, couldn't do it, fell back down. Now the market is closing at 90.86, and that took the price back above the 38.2% retracement of the same move to the downside of the 2023 trading range. That level was broken on Friday's trade, but as you can see, we moved back higher, and we're currently trading at 90.81. I want you to remember this level, 0.90564. We'll talk about it when we go to the hourly chart, which we're going to do right now. Now we go to the hourly chart and look at it. What do we see in trading here this week? The first off here is the move above the 100-day moving average. A failure above that level. It actually stayed above there for a couple hours before rotating back to the downside, and once we started to see that, we saw the continued momentum to the downside in Thursday's trade. Now, admittedly, the price moved up here and here to retest these high prices here, and could not get above those levels at the 100-day moving average. Was just too much of a push away, and the market rotated to the downside. We moved below the 100-hour moving average, and then the 200-hour moving average on Friday was broken before the jobs report, but we came down to this swing area through here where we had a number of different swing lows and swing highs. I'm outlining them like I usually do in this area, and you can see the number of times that the market tried to hold support or resistance against that level. Now, we did break below the 200-hour moving average right here and failed. This chart seems to be more about failures, failure here. And in fact, the last time the market moved below the 200-hour moving average here, it also failed. And in trading here today, or on Friday, I should say, the price also moved below that area and failed. We failed against this swing area right here and rotated back to the upside before the jobs report, and then we had the volatility of the jobs report started to move back to the upside. Now, I told you to remember that 90.56.4 level from our daily chart, and I'll go back to that level just to show you what I mean. 90.56.4 level is the 38.2% retracement level. Let's go to our hourly chart and look at 95.64. That corresponds with the 200-hour moving average. So guess what? Going into the new trading week, we have a 38.2% retracement of the range for 2023 at 95.64. We also have the rising 200-hour moving average right at that same level. So that level, this level right here, is going to be a key level early in the week. And in this week, if the price can stay above the 200-hour moving average, the bias would be more to the upside. Ahead of that is going to be the 100-hour moving average and this swing area as well, where we could potentially look for support as well. But right now, the buyers are more in control above the 100, above the 38.2 on the daily chart and the 200-hour moving average, and trying to keep control of what has been more of a bullish move in this pair since the May low. But we did try to test it on Friday with the break below the 200-hour moving average, but couldn't get very far, could we? Now, if we can't go lower, then the price has the potential to move back to the upside. And on the upside, what we're going to be focused on in the new trading week is this blue line right here, the 100-day moving average. Once again, if we're able to get above that level at 0.9126, then that would open the door for further upside with the high price from Wednesday's trade as the next key target to get to and through. If we get above that level, the door opens for further upside momentum in this currency pair. So watch the 100-hour moving average, watch the 200-hour moving average, 38.2% retracement on the daily chart, and then up here, watch the 100-day moving average and that 50% retracement, which is also at the 100-day moving average. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.